Trading is a business, and that is something that all successful traders believe. And I know that that can be hard to imagine, that you're actually a company when you're sitting in the comforts of your home and you're just pushing some buttons. And if you don't believe that it is a business, then it's something that you really should not venture into. You can trade the markets as a hobbyist, but there are many other hobbies that you can pursue that don't have the same negative effect on you that trading can have. So if we can agree that trading is an actual business, then we should consider this fact. About 80% of new businesses survive past their first year of operation. That's pretty impressive, but also consider that after 5 years, half of all businesses no longer exist, and only 30% make it to a decade. With a trading business, and if we believe the statistics that are mentioned, about 85% of traders fail. Well, the problem with that number of failed traders is we don't know what constitutes a trader because it's never really defined. So what makes you a trader? Does opening a trading account make you a trader? Does investing in a charting platform make you a trader? Anybody can open a trading account and press some buttons to enter and exit a trading position. Does that define them as a trader? It's difficult to assume everyone that places a trade is an actual trader if we compare how people approach the market. I personally would be more inclined to define this as a trader and someone with a trading business. It's someone who has tested and defined a trading plan and edge. It's someone who regularly audits their own performance and they tweak what needs to be tweaked. It's someone that can avoid emotional trading and they understand that there are different hats to be worn in the trading business. From my experience, those three traits are not common among people who never gain ground in trading. Of course, this is not an exhaustive list, but it's a good start. And your trading business can fail like any other business. It's difficult to nail down what constitutes a trader with any degree of accuracy. Let's look at your trading business through the same lens as any other business that you're going to encounter. According to the 2015 and 2016 Global Entrepreneurship Report that was published by Babson College, over half of businesses that ceased to operate did so for two main factors. One, lack of profits. Second, lack of funding. Those two issues are prevalent in the trading industry. And if we again believe the reports about failed trading businesses, most never make any money, and funding an account repeatedly is an issue. So let's look deeper into the reasons that companies fail and let this be a warning as you venture into trading for a living or as a side business. People starting for the wrong reason. This is a big one right off the bat. If you want to make loads of money and have much more free time, or you just don't want to work for a boss, the chances are that you're going to get a rude awakening pretty quickly. To get through the early struggles and obstacles that you're going to face along the road to trading success, it's hugely beneficial to have a passion for it. And you're only going to know if you truly have a passion through a proper understanding of the trading world and how the markets move. Yes, making fast money can be a passion, but that's not going to keep you from going through the losses. Being undercapitalized will not allow your business a chance to grow. If you don't have enough working capital to be able to cover running costs and absorb your losses as you work towards establishing your business and the most appropriate way to operate it, you are never going to be able to get to a point where you're stable. Overestimation of how much a business will earn is also pretty common. Then there's that little matter of living costs. So if you've given up the security of a steady paycheck, you have bills to pay, and that must be taken into account how much you need to make as return on your capital. You must use your profit for living expenses, and that can drain your trading account, especially as you go through a string of losing trades. No skill. This might sound a bit like the chicken and the egg, but let me ask you, how many industries do people start a business before they actually learn their trade? Well, those who do are going to face an uphill struggle. Let me ask you that question differently. Would you invest in a startup business where the main person either was yet to learn the required skills or had little to no experience in the industry? No, you probably wouldn't. This skill issue is a real problem in trading. If you can find a trading strategy with a true edge, you are in the minority. The edges in trading are small, and the general theory that you're going to read on forums and on those email giveaways and those free PDFs generally are mostly rehashed techniques that don't really have an edge. Your pie in the sky dreams are not in line with reality. And when you first come across any industry or potential business opportunity, there's no certainty that your understanding of it, your product or your idea and your skills are a good representation of what's really needed to be successful. Taking time to research and assess is crucial to getting a clearer picture, in addition to the realization that as you gain more experience, your understanding may shift and certainly become more complete. In the beginning, traders look at day trading futures as a means to getting rich. Over time, many realize that they don't have the capacity for day trading, and then they use a different market and approach in their trading business. You have no plan for how to operate the business. Well, without a proper business plan, you will have little direction or targets, and therefore no way of objectively reviewing its level of performance and the market that it's in. Without a plan, a business may not be focused enough on a fundamental product or a service, which it does really well. Time and capital, therefore, are allocated inefficiently, and the resources are never put to best use. With trading, a trading plan that outlines the tested variables that you need to see to take a trade is a must. Without one, an in-depth review of what works and what doesn't work, or whether a trader can improve other aspects of trading, it's just not possible. You also must know if you are a day trader, a swing trader, or a mix of both. How you approach the markets will differ depending on where you put your focus. Ignoring the big picture is a mistake. Now, admittedly, it can be easy at times when you're on a roll to just keep going in the same direction and not want to get distracted by just the possibilities of the future. However, the reality of business and in life is that nothing stays the same forever. Regulations change, business environments change, habits change. Knowing what might happen before it does leads to potential opportunity. Not acknowledging change leads to going out of business. Think of the company who invented the digital camera. Think of what traditional mechanical hard disk drive manufacturers are starting to do now. Businesses rarely change overnight, but if you want to be in it for any length of time, you'll need to, at the very least, keep one eye on the big picture. For traders, understanding the bigger market context is important to ensure that you are not surprised by the longer-term trend changes. Business rules don't exist. In trading, this usually comes as part of the plan, but any business must set rules in order to protect its future. The trouble is that rules can also be a hindrance as well as insurance against the worst-case scenario. With the big picture in mind, rules might need to be adapted over time. What serves you well right now may not serve you well in the future. Think about a strong uptrend where you are continually buying, but you've made no rules to tell you when that buying should stop. When that trend change does happen, you are going to be swimming upstream and racking up your losses. When someone who may have already been successful in their career starts a new business, the rules don't necessarily come easily. Flourishing in an environment where rules are already in place is a completely different prospect to being able to set the rules yourself. Being able to set good rules and stick to them can make all the difference to whether a new business, or any business for that matter, is a success or a failure. Failing to review your progress. Without a plan, a business is likely to be doomed from the outset. Without a procedure to measure and review performance, a plan is useless. Not being able to step back and objectively assess the performance of the plan, the market you're in, and the degree to which that plan has been followed will make it very difficult to ever make appropriate and well thought out changes. The fact is, I very much doubt that any of these reasons for business startup failings will come as much of a surprise. Mostly it's just common sense. But then why do so many people fail to take account of these ideas? You must treat your trading like any other business and manage it well. Give yourself that best chance to succeed that you can and ensure that you're covering the 8 points that we just talked about.